Starbucks did receive a downgrade today from the desk of TD Cowen over concerns on said China growth. TD Cowen's Andrew Charles is here at Post 9 talking more about the note. It's good to have you. Thanks for coming in. You used the word albatross.
Yes.
Why that definitive about the challenges in China?
Good morning. Yeah, I think it's more of a call on the multiple here that China has really dominated the investor narrative. You know, frankly, this reminds us a lot about Yum in circa 2005 when China reached about 15% of their normalized operating profits and really became the dominating investor narrative, for the following decade. And so I think we're seeing the same thing here with China, with Starbucks, that for here on out, for the foreseeable future, we're going to see this dominate the investor narrative. And here we are, looking at a very competitive set in China that's indicated to be using aggressive discounts by competitors for the next 2+ years, combined with a macro backdrop that's a little bit dicey. And so we just see better opportunities elsewhere and choose to step sideways.
So you take your China comps for next year and 25, roughly in half?
We did, yeah. I mean, the key thing I would say is that we are below consensus. I think the consensus numbers are a bit stretched right now. And the call here really isn't around the EPS. We think that 23 through 25 EPS can still meet consensus numbers. We think it'll be a little bit more driven by share buyback, a little bit more by G&A cuts as well. But really just that multiple, I think, is going to be hindered as the China narrative is going to be challenged by competitors in the macro.
I just want to understand your price target here, because you downgraded it but took it to 107, which is still where we are right now, but lower than where you were at 117. So are you just playing catch up with the price action? It's already been pretty weak. Sure.
The signal I think we're trying to send is that shares are in a holding pattern, that, we do see some upside, but I think the multiple is going to be really restrained. If I think back, this is one where, this one typically traded in a 23 to 25 times range. If I look back at the 3, 5-year and 10-year averages, that seems to be the right ceiling in where we think about the interest rate environment today, as well as the fact that the last 3 years, big focus on the U.S. recovery, which has been very successful. Now more of a focus on China going forward.
Can U.S. come to the rescue again?
I think the U.S. business is going to do fine. We model in line with consensus. We really like the playbook they're doing there with ICE, with throughput, with also digital enhancements they've been making the business. So we're pretty excited about that. We model in line with consensus, so I don't think it's going to overshadow China.
And if you were going to choose a problem to be addressed in China, is it about the macro or some of the discounting and aggression of local rivals?
Sure. We'll be talking about macro, for the next decade or so. I think it's really about the competition that we're really more focused on. That I think that's what we're looking for to be better addressed.
Do you think that's been the weight on the stock so far this year?
I think that's a piece of it. I think that, it's something that is becoming increasingly more understood by investors. But I do think that, this is going to be a bigger narrative that's here to stay. I mean, some of these competitors, Sarah, for instance, I think of Cowen, which is one that investors seem familiar with. This is a company that just started in October of 2022. It's 5,000 locations today. I mean, this just kind of exemplifies China and the operating environment there about how quickly things can change and the dynamics in China. So it's just something that, we're monitoring going forward.
I mean, the flip side is that Starbucks, and this is something Nike says, is not a strategic industry. It's not like semiconductors, so it doesn't really stand in the way in terms of the geopolitical tensions. And this is an economy that is trying to stimulate its way to growth. And those are both upsides.
I think, I understand the point. I would say that, with longer term, focus on China, I think the challenge, though, is the fact that, yes, there's still, low consumption today. But I think that as people are forming habits, this is something that obviously we know in the U.S. is a ritualistic-based occasion. This top of the first inning of growth that we're in China, I think having these low-price competitors that are going to be stealing share for them for the next 2 years, most likely, just given the low discounts they have in place, I think it's going to be something that's going to disadvantage Starbucks as we look ahead.
Yeah, not the only business where that dynamic is showing itself. Andrew, thanks. Good to see you. Thanks for coming in.
Thanks.
Thanks, Andrew.